Oh man, I'm so frustrated. The market's been crazy right now, and I'm going to share with you my screen. I'm going to just tell you a quick story about what just happened today and how it could have been a lot different of an outcome. So hold on, I'm going to get over on the computer real quick and share my screen. Hold on. Oh, so have you ever done something in your financial world where you just feel like, oh, just like a punch in the gut, like I should have done this, or I should have bought this then, or should have sold this then, and oh, today I'm just kicking myself a little bit. So let me tell you a quick story. Um, Back all the way in 2016, the trust that my mom and dad had set up had purchased some silver as a hedge against the dollar, right? The precious metals do that as the dollar is getting weaker. So this is kind of roughly right here around June of 2016. And so it looks like you see this dip right here, like, okay, this is a good opportunity to buy some silver. And guess what? So we watch it go up and up, thought we were geniuses, and then shortly thereafter it starts trailing down. So this is 2017, keeps going down, keep going down, and then down here we feel just like, oh my gosh, we are the biggest idiots ever. It's funny how and the market does that to us. Then it continues to rise up, and now recently what we're seeing as we fast forward is that we see a big spike here. We've printed so much money in the United States, the dollar is getting weaker, and they're working on passing a new bill. So a couple days ago, we were evaluating like, hey, finally we're in the money. We're making money on this deal. And we did make some good money. So we sold right about here. Okay. Now keep in mind that every dollar that it goes up, it would be about a $15,000 gain to my parents' trust. Now here it goes, we're like, okay, yeah, we sold, and then it goes down like, all right, we made the right decision. Yes, we're geniuses again. We're back to genius. But now as we wake up, it's all the way up here. So this gap right here is what is that? That's a $3 gap. So it's almost $4. So $45,000 to $50,000 we could have gained by if we had known this. And that's the thing. So in this conversation, what I want to talk to you is about investor psychology. We don't know when we're over here and we can't see what's happening to the next day. So each line that you see this ticker right here is a day. We don't know what's going to happen today. There's so many moving parts. The markets are so volatile right now, and no one can really predict where things are going because of how everything integrates, as well as you've got humans in this as well, which are going off of emotion. And so my point to you is, as you're planning to grow your assets, most of us are growing our assets in something like a 401k or growing it inside some type of correlated asset, meaning that it's in real estate, it's in the stock market, cryptocurrencies, anything that's correlated to the market interest rate environment, economy, et cetera, et cetera. As you're trying to trade the market, what happens is the emotions get the best of you. You get to this point and you're thinking like, oh man, should we sell, and because we think it's going to go down, or should we wait and hold a buyout? So we made our best decision here, and we'll live with that. And it was still good. We still were profitable. But it's hard to do that. And what happens is if we held it, say back here, and we're like, should we sell it? And we didn't sell it, and then it goes down, then you'd be kicking yourself. Or imagine if you were just coming up to retirement in February of that year, and then you waited to sell your positions until March, and how much loss. This is why trading in the marketplace is so difficult to be profitable, because we are humans and have emotion, and we know what that extra dollars we would do with and what we'd be afraid of losing if it went down. So anyway, I hope you can kind of relate to this. My point is that as you create more of a balanced portfolio between correlated assets and not correlated assets or non-correlated assets, the financial piece in your mind, in your emotions, is going to be so much better. You'll be able to be a better investor, make better decisions, because you know that not everything is on the line. And so that's my spiel for you today, and I hope you enjoyed this short video.